Good afternoon, investors. You are now on KleverStock with me, Anunjaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened marginally higher in early trade as investors took a cautious stance ahead of a potential Chinese New Year CNY rally, with Venezuela-related developments having little impact on local sentiment. At 9:05 a.m., the FPM KLCI edged up 0.32 of a point or 0.01% or 1,670.08 from last Friday's close of 1,669.76. The benchmark had opened 0.02 of a point lower at 1,669.78. Market breadth was positive, with gainers leading losers 159 to 88. Some 340 counters were unchanged, 2,068 were untraded, and 17 were suspended. Rakuten Trader Berhad's Vice President of Equity Research, Tong Pat Leng, said the local market was in sync with global markets, with a mixed first day for 2026 on Wall Street as selling of tech-related stocks continued. He added, as a result, the Nasdaq closed in negative territory, while both the S&P 500 and Dow Jones Industrial Average ended in positive territory. He also said that the FPM KLCI declined amid some profit-taking activities following a solid run-up in December 2025, and the local bourse may be taking a breather before realigning itself for a possible CNY rally as market liquidity builds. He added, for today, we expect the index to trend between the 1,650 to 1,670 range. In the latest geopolitical development involving the United States and Venezuela, Thong said the market has yet to react to the news. Kenanga Investment Bank Berhad said in a research note that while headlines have been dominated by the sudden seizing of Venezuelan President Maduro by the US on narco-terrorism charges, any overreaction in the market could present an opportunity to buy on dips for the local market. It's that the situation is still fluid. We do not expect equity markets to be highly choppy, given that fundamentally we do not see escalation, and countries such as China and Russia will, in our view, limit their reactions to strong remarks against the strike. Anecdotally, canvassing the performance of both ASEAN and Malaysian markets, the impact of geopolitical events has mostly been benign to equities, with any weekly pullback usually within 1% range. Among heavyweight stocks, Maybank fell 4 cents to 10 ringgit and 40 cents, while CIMB, Public Bank and IHH were 1 cent lower at 8 ringgit and 9 cents, 4 ringgit and 48 cents and 8 ringgit and 59 cents respectively. While Tenaga Nasional was flat at 13 ringgit and 78 cents. On the most active list, Insights Analytics rose 10 cents to 1 ringgit and 23 cents, while TWL, Pharmaniaga and Tanco were unchanged at 2.5 cents, 28 cents and 1 ringgit and 18 cents respectively. Among top gainers, KLK and Malaysian Pacific advanced 18 cents to 19 ringgit and 98 cents and 31 ringgit and 38 cents respectively, while PPB and Petronas Dagangan improved 10 cents each to 10 ringgit and 74 cents and 20 ringgit and 16 cents. Top decliners saw Nestle fall 20 cents to 114 ringgit and 30 cents. Alliance Malaysia declined 10 cents to 20 ringgit and 10 cents. And KLCC Property eased 4 cents to 8 ringgit and 77 cents. Moving on to our local currency and foreign exchange. The ringgit opened slightly lower against US dollar on Monday as global risk appetite turned more cautious, prompting investors to pair exposures to emerging market assets. At 8 a.m., the local currency eased to 4.0580 or 4.0680 versus the greenback, compared with last Friday's close of 4.0551 or 4.0560. IPPFA Sdn Bhd Director of Investment Strategy and country economist Mohammad Siddiq Jantan said periods of de-risking typically see capital rotate into the US dollar as a liquid safe haven, leaving regional currencies, including the ringgit, under temporary pressure. He said the latest US military strike on Venezuela has added to this risk-off tone, while the event itself does not alter Malaysia's economic fundamentals, it heightens geopolitical uncertainty, which tends to lift demand for US assets and reinforce near-term dollar strength. At the same time, he said the US Federal Open Market Committee's December minutes have underpinned the dollar. He added the minutes revealed a divided committee, with most participants signaling that further rate cuts should be paused unless inflation continues to ease, while some argued for keeping rates unchanged for a prolonged period after 3 cuts in 2025. This more cautious US Federal Reserve stance has lifted US yield expectations, widening rate differentials and adding further pressure on the ringgit. At the open market, the ringgit traded lower against a basket of major currencies. It depreciated against Japanese yen to 2.5845 or 2.591, edged slightly lower versus the British pound to 5.4527 or 5.4662, and eased vis-a-vis the euro to 4.7499 or 4.7616. The local note was mixed against ASEAN peers. It weakened against Singapore dollar to 3.1506 or 3.1586 and was down versus the Philippine peso at 6.89 or 6.91. Meanwhile, the ringgit gained versus the Thai baht to 12.8662 or 12.9073, while it was flat vis-a-vis the Indonesian rupiah at 242.6 or 243.3. Now for some local news. The Malaysia External Trade Development Corporation (Matrade) is stepping up efforts to support the global expansion of Malaysian exporters, with its 2026 roadmap outlining 203 high-impact trade promotion programs. Newly appointed Chief Executive Officer CEO Abu Bakar Yusof said the programs reflect Matrade's unwavering commitment to propelling Malaysian brands into the global marketplace. In a statement yesterday, he said this initiative is designed to strategically empower 13,400 Malaysian companies, particularly micro, small and medium enterprises (MSMEs) in the export market. Abu Bakar, who became Matrade CEO on December 20th, 2025, also emphasized the agency's priority of ensuring seamless continuity and sustained export momentum under the 13th Malaysian Plan. He added, Matrade remains dedicated to delivering tangible outcomes for our exporters, while fostering an ecosystem that drives inclusive and sustainable growth for the nation's economy. Meanwhile, the 2026 strategic roadmap highlights a strong focus on business continuity and human capital development, including strengthening workforce competency to address emerging global mega trends such as artificial intelligence, as well as challenges arising from tariff impacts and evolving trade dynamics. In addition, Matrade will pursue strategic collaborations by deepening public-private partnerships with prominent local and international entities to strengthen the trade and export ecosystem and facilitate global expansion for Malaysian companies, particularly MSMEs. Continuing with some commodity updates. Oil prices fell on Monday after a U.S. military operation seized Venezuelan leader Nicolas Maduro, whose country has the world's biggest proven crude reserves. Increased volumes of Venezuelan oil entering the market would add to oversupply concerns and put further pressure on oil prices, which have fallen in recent months. In morning trade in Asia, Brent crude was down 0.21% at $60.62 per barrel, while the West Texas Intermediate was off 0.35% at $57.12 for both of earlier lows. U.S. forces attacked Caracas in the early hours of Saturday, bombing military targets and sprinting away Maduro and his wife to face federal narco-trafficking charges in New York. U.S. President Donald Trump has said that the United States will now run Venezuela and send U.S. companies to fix its badly dilapidated oil infrastructure. After years of underinvestment and sanctions, Venezuela currently pumps around 1 million barrels per day, down from 3.5 MBD in 1999. But analysts said that alongside other major questions about Venezuela's future, substantially lifting its oil production will not be easy or quick. UBS analyst Giovanni Satunovo said any recovery in production would require substantial investment, given the crumbling infrastructure resulting from years of mismanagement and underinvestment. Investing today also holds little appeal. Oil prices are weighed down by a supply glut and fell in 2025 despite significant growth headwinds like Trump's tariff war and the ongoing conflict in Ukraine. We'll now take a short break, but don't go away. We will return shortly with more corporate news developments. Welcome back to the Midday Roundup. Let's continue with some local corporate news updates. Foreign investors continue to sell for the fourth consecutive week, with net outflows rising 65% to 904 million ringgit last week compared with the prior week. Bursa Malaysia was closed on Thursday for the New Year holiday. In a fund flow report, MBSP Investment Bank Berhad said foreign investors were net sellers on every trading day, with the largest outflow recorded on Wednesday, 270 million ringgit, followed by Tuesday, 261.7 million ringgit, Friday, 232.4 million ringgit, and Monday, 140 million ringgit. The firm noted that the top three sectors that recorded net foreign inflows were telecommunications and media, 16.6 million ringgit, industrial products and services, 14.8 million ringgit, and technology, 8.1 million ringgit. Meanwhile, it said the top three sectors that recorded net foreign outflows were financial services, 482.8 billion ringgit, utilities, 258.2 million ringgit, and plantation, 75.9 million ringgit. It added local institutions recorded net buying for the seventh consecutive week, with net inflows totaling 924.1 million ringgit last week. The firm also noted that local retailers were net sellers for the fifth consecutive week, with a net outflow of 20 million ringgit last week. The average daily trading volume ADTV recorded broad-based gains, rising 3.6% for local retailers, 18.1% for local institutions, and 1.5% for foreign investors. Up next, we have some business news update. Tightening system liquidity remains a key risk that could weigh on the banking sector's cost of funds COF in coming quarters, especially with calendar year 2026. MBSB research said several banks have flagged with a tighter liquidity environment, with weaker liquidity indicators reported in the last quarter. While loan growth prospects are turning brighter, the firm cautioned that this could cause liquidity to dry up faster than anticipated, leading to intense deposit competition returning. In a note, it said this remains the main headwind that the sector faces, otherwise tailwinds remain plentiful. On a regional comparison, MBSB research noted that Malaysian banks continue to look attractive due to robust earnings, high dividend yields, relatively stable asset quality, and the absence of major geopolitical or political risk. In the near term, the firm said free base income is expected to be a key driver of top-line growth. It said wealth management, bancassurance, and debt capital markets are common drivers of fee side, especially as market performance, loan growth, and economic sentiment improve in the second half of the calendar year 2025. We do see more subdued investment income given the stabilization of interest rates. Meanwhile, MBSP research said the net interest margins, NIMs, are also expected to be more stable going forward, although upside potential appears capped. It said with the steepest compression already behind us, most banks are guiding for more stable NIMs, or at least more muted compression. Overall, MBSP research noted that tailwinds remain plentiful due to the elevated dividend yields, improved loan growth prospects, further gross impaired loans, GILs, recovery, stability in NIMs, and stronger fee income, which remain convincing drivers. It added headwinds such as asset quality issues and tightening liquidity remain background characters for now. It said, we think there's further, albeit limited, room for further share price appreciation. Maintain a positive call on the banking sector. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Chin Hin Group Berhad said it has entered into a memorandum of understanding with ECXL Wire Holdings Sdn Berhad on January 2, 2026 to establish a strategic alliance aimed at delivering mutual benefits and operational synergies. NREL Group Berhad said its unit Hamptons Homes Sdn Berhad has entered into two unincorporated joint venture agreements with entire Rolls Sdn Berhad to develop double-story medium-cost terrace houses on 2.2 hectares of land in Kulai, Johor. Go Hub Capital Berhad has proposed to raise up to 21.2 million ringgit via a private placement of shares, representing 10% of its enlarged share base to fund 4 new projects. Fetis Holdings Berhad said it has secured a 12.6 million ringgit contract from a leading Malaysian utility company to provide human capital management cloud software subscription services. And last but not least, Omesti Berhad said Teguh Sedaya Senja Berhad has emerged as its largest shareholder after acquiring an additional 8.5% stake, lifting its total shareholding to 22.6%. Now that's a wrap of Midday Roundup with me, Ainu Jaria on KleverStock. Thank you for choosing us investors. Stay tuned for the next upcoming program live streams.